1945 area, something like that. It just closed right at the last print on the ES on Friday at the cash was the high, and then it pulled back a little bit into the pit close. And so today was expected to be higher, but Germany came out with a major number. It's called the IFO, which missed, and it caused a gap down for us from the European session. The European session opened and pushed up right away. The European session opens at 2 Eastern, 2 at night Eastern. Pushed up right away because the stress tests were not as bad as what was expected. And then about an hour or 2 hours later, the Germans came out with their IFO, and they were worse. And you saw the drop, and you saw continued selling throughout the European session. Money was moving into the Bund and other interest rate products and away from equities. The expectation this morning when I came in for the trader bite was that we are likely to test lower early because of the way we had we were positioned right before the open. Essentially, the sell-off happened between E8 and 9:15 Eastern this morning. We were opening near low, so we expected a lower low, pushed to 44.5, but the expectation is for us to climb. That was my primary hypothesis or idea for the day. The target above was 1962 even, and we stopped short where we reached 59, and we've turned back and we're stuck in the middle now. We have an inside day so far, which I did not expect. I expected us to either sell off or push higher, with the push higher being more likely. I expect the trend from last week to continue given the way Friday closed and the weakness in Europe. I expected the weakness in Europe to be absorbed by the U.S. session when we open it. We still have a chance at 1962, but so far it's an inside day.
Yeah, nice recap. Very nice recap. So you're seeing down the road, we talk about further this week, and you know what? As you see, we have this major trend line back here, this blue line that we've eventually we broke through, and that was our big breakout and the thing. We're coming right back up to it. We're almost ready to retest that again, and I know we both look at retracements or retest of prior levels. So we have a level. How far do you think that if we get through that 1952 level, do you see us actually pushing up into, say, November or December? Is there a time frame? Is there a seasonality trade that you're looking at also? Is it going to help everything here?
Yeah, I'm not looking at seasonalities. I'm just for now. I mean, we know that October often experiences some sort of reversal. We had a heck of a reversal there. The cash is trading 1959.01 right now. The futures at 52. So there's a point. There's about a 7-point difference or 6-point difference between them. The level that you show that was broken that we're coming back to coincides with approximately 1962, which I have listed on the chart on my level. So there's a coincidence there. If it takes long for us to reach that trend line, then I'm looking in the futures at 1971.75 as the next area up. Transports are continuing to push higher on the day. Transports, if you believe in Dow theory or not sure, but transports I tend not to want to fade whichever way transports go. The Dow Jones transports are kind of like a blood test for the economy. It's great that we're creating all these things, but somehow we have to ship them to consumers, whether it's industrial, consumer goods, whatever, including services. A lot of the time has to be transported, and so transports keep pushing highs, even though we've had a deeper than I would pullback than I had expected on this push from down from 59. I think the upside still has room, but I do expect a reaction on that trend line in that area, and I've got 2 levels for that, depending on how long it takes.
Yeah, it's amazing how our levels come into, it's interesting, because I think, I'm feeling the strength in the market today. I just feel like there's opportunity for us to go down, but the market is just continuing to push higher, so people are buying this up, and I could see this level just getting that test right up here where we have two big trend lines coming in. So just to put on record, I do expect to get a little bit higher into that trend line wherever that shows up. You know,
Hmm.
1973 on the cash if I measured it out that way.
But think about it. So the sell-off happened from the first day of October.
Yeah,
So the first day of October, we opened at what level? 1962, the level I just mentioned.
yeah,
And we came back to 1960 last week. So in the last a little over a week, we took back everything that we did from October 1st till about October 17th. And it came back hard. So we're almost at 100% retracement
yeah.
on October's fall. We are inside of the balance zone that we've been stuck in on a very low volatility grind from the middle of August all the way to the last day of September. The first day of October was a sell-off. And so to me, you can make an argument for a bear side, and I'm open to whatever side takes place. I just don't trade with a swing mentality, but I'm going to tell you that if sellers were strong, it's hard to, you look at this chart that you have up on the screen here. It's hard to believe that sellers are really managing to put a lid on the buyers if they can come all the way
Oh, yeah,
back
yeah.
100%. It's odd. Even if you don't believe in fibs or use fibs, you would think that strong selling or a market that has a long-term, like gigantic seller, institutional seller, whatever, would be selling all the way up, causing the buyers to have to basically run out of ammo and eventually give in and become sellers as they cover their long positions. So here this was seen more as a pullback for better prices so far than as a, oh my God, the world's coming to an end, we're all going to get Ebola and die type of thing. And this is what we discussed a couple weeks ago, where you and I were talking about this, and we're saying, man, don't get overexcited with the selling. Like every single time for the last 3 years or 4 years, every time we have one of these sharp sell-offs, it comes all the way back. We end up with a V bottom. And the way I've tracked it is through the New York Stock Exchange 52-week lows and highs, and seeing how they're responding. And whenever the 52-week lows spike up, generally it marks the end of that swing, at least for the last 2 years. So to me, this is just more of the same. This is more of a continuation, a little spring cleaning. It gave us amazing volatility. I mean, the VIX jumped up to over 30. Now it's back to 16 and 15. Everything is kind of like one of those things, move along, nothing to see here, move along, just a few dead shorts. It's just, it's brutal. It's brutal, but it's just, you've got to look at the big picture and you've got to see who is really in control, as opposed to formulating your ideas based on some macroeconomic view and opinion. Looking at the various newsletters that are saying the end is near, the end is near. Oh, here it is, the end is here. And
Yeah.
and people jump on, and it's like it's not here until it shows up in the chart. Don't try to be the hero that catches the turn and gets 5 minutes of fame. Be the person, the trader that tries to does his best to capture, the 70 or 60% in the belly, in the middle. Be in the middle. That's where you want to be. You don't want to be on the turn, because the turns are very, very expensive to predict. So I see that all the time, where people just form an opinion and go in there, and as soon as the market starts to sell off, here they are loading up on puts and selling 3 indices short, all in the same direction and stuff like that. And it's sad to see, but this is how it is. And this is another example of the market just snapping back, because the main attitude of the market and central bankers is that this is likely to go higher. Like you're working against sovereign nations and central banks and politicians who have a strong interest in values going up. It's creating, money out of thin air if the market goes up. Who's to say that Facebook should be valued where it is, um, other than the fact that this is the anticipated value. It's not the book value of any given company on the S&P 500 is not the same as its stock value.
Yeah.
It's just the way things are. But anyway, I won't rant on that. I just
Always
want
good.
people to kind of look at the chart and be objective. That's our goal. Our goal as traders and investors is to be Inspector Columbo or whoever your favorite inspector it is, as long as it's not Inspector Gadget.
Yeah.
Um, just kind of be very CSI about your tech. Just your technical analysis. Be very objective and base your opinion on that. Don't take the position that, oh my God, our government's a wreck and the bankers
Yeah.
are
Yeah.
holding this and it can't go up, and look at the dollar and look at just that's all great to have an opinion, but that is coloring your trading intraday. And it's creating a bias that's going to be very, very hard for people to break. It's better to just look at the chart and say, what is this telling me? Who is dominating the current trade? Like today, who is dominating the trade? We tested 44.50. We found buyers, and we crossed the open. We trade right past the open, and we find sellers at 59. And that's it. There's not much more to it. And we're in the middle. So is there any action to be taken right now where it's trading here at 53.75? Probably not, unless you're looking to scalp. But the market's already told you. For today, we found buyers at 44 and we found sellers at 59. That's all we know. Okay? And it's an inside day. There's nothing new to price in. We have the Fed meeting starting tomorrow, which with the result coming in at 2 o'clock Eastern on Wednesday. We have GDP, final GDP. We have a couple of other things coming out this week, and it's the end of the month. Friday we have Chicago PMI, Michigan sentiment. But other than that, it's kind of business as usual, and the market's already pretty much canceled out the entire sell-off, and we're back to where we were before all that happened, which brings all the levels that I had been talking about from August, middle of August to the end of September back in play. Key of which will be 87.50. If we test 87.50, hold that area, and start to push through and over 2,000, then the high has a very high probability of being taken out, and we're back on the same course. You just need to adjust your trend line now to the new low.
Yeah.
That's all it is.
Awesome. All right. Well, that's awesome. I mean, you did such a good job. I actually recorded this segment just to because you went over such just key important factors of not being overwhelmed by the market, but taking a logical approach to it and making sure you're just, the easiest thing in the world, and this is great, and it's a term I use, it's have the wind in your sail. Instead of going against the grain, go with the grain. So, like you said, important when you do come down to make a spot, make a trade, make sure that level is not a level where you could still move down and you're taking a guess. Why don't you confirm your move back up, and then you're getting into the meat of the move.
Just find something. Yeah, just try. Don't try to trade the turn. Don't try to predict the turn. Just trade the middle. By the way, a lot of people listen to you. How would you define the word detached? To say, I'm detached from the action. What does that mean to you? I think a lot of people confuse the meaning of that when I talk about detachment while trading. What does it mean to you?
I think detachment for me, when you say detached, I think about television and being detached from the surrounding media buzz and what the surrounding opinion of, like you mentioned earlier, is like having an opinion against the market. So I'm detached from everything else out there, and I'm just really paying attention to my charts.
To your system, yeah, right,
Yeah.
to your approach.
Yeah.
So detachment doesn't mean that you don't care. It just means that you separate yourself from whatever's happening around you, right? And this is an important point I just want to make sure I make before I hop off, is your in my opinion, in my experience, even with my prop traders, the one thing that I spent a lot of time on, I would say a good 80% of the time, that's not an empirical number, it's just a guess, 80% of the time, effort, and money in helping a prop trader turn, and it's pretty intense training that I do when they do come through, when they get hired. 80% of the time is getting them to manage their expectations and getting them to the point where they are detached. So we don't want to tie our self-worth with the next trade, because doing that would be incredibly stressful if you're a great trader because you took a winner and now you're a lousy trader because you took a loser, because that with every trade you're going to have an emotional up and down. I used to push this idea of being detached, and a lot of people, a lot of the guys would confuse that with not caring. How could I be detached if I'm losing money? No, you should care that you're losing money, but you should be detached from every individual trade and from other people's opinions and from what the market is doing. If your idea for the day is that it was going to rally and the market just sells off at the open, that shouldn't give you a heartache. It should just tell you that, hey, I expected it to rally for XYZ reasons, and the market's proving that that's not a good case. Therefore, I have a much bigger opportunity now if I look on the short side. That's detachment. Being attached to your ideas, to your trades, and so forth will force you to be the guy who decides early on that my plan for the day is to get long, and here are my targets, and then you find yourself buying as the market sells off. That it's really important for you to just listen in to your thoughts and how you feel while you're trading live. That gives you just tremendous clues and mentoring that you cannot buy anywhere. Just listen to yourself. Are you fighting this? Are you disagreeing with what price is saying? What's the point of disagreeing? Be detached. Care about what you're doing, but be detached from the outcome, because no matter what you do, the next trade could be a loser. There's no way you can control that. All you can do is control how much you're willing to bet to find out, and that's really the bottom line.
Nice stuff today, FT.
Very cool.
One last question. Do you see us getting back up to that 62 today?
It still has a chance. The volume today is horrendous. The volume today is about half of from the beginning. It was about half of what the 20-day median has been. So the market's really taken a break here. However, we still have a good 4 hours to the session. 3.5 hours. A lot can happen in 3.5 hours. We're in the lunch period now, but this is still holding. This is still holding pretty good. I mean, this could very easily go down to 44.50 one ticket and then take out 59. Yeah. It's hard to tell, but the key question is, what has it done the days before it? And if you look back at the days before it, man, it shows that there's some bigger time frame players, bigger investors stepping in and buying this. So I still think that it can get to 62 for the day, but I'm not willing to get long right here and hope for it. It just needs to kind of get out of this chop zone for me to see it. It needs to break higher and then pull back, start to turn, and then that'll give me the opportunity to hop on and continue my plan from the pre-market for the 62.
I agree. I think we get to 62 today, but I think I'm a little more confident in that.
Assuming nobody says anything,
nothing,
the market doesn't like.
No Ebola outbreaks. You remember last week? One last thing. I just noticed a spike down last week. Was it on Friday? And it just spiked down 10 points, and it was about that doctor. When that doctor got diagnosed, it was last week.
The introduction of Ebola to New York.
Yeah, and that was so funny. And it dropped 10 points, and it moved back up. It happened towards the end of the day, I think. And overnight, it moved back up. But, today there was another rumor of that, maybe a kid, and we didn't see the market react that time. The market's starting to really price in these Ebola events.
Yeah, they become buying opportunities because nothing has happened in the past. Traders are very quick. We have money on the line, so traders are very quick to kind of learn from their mistakes. The ones that make money, at least. And I think the Ebola thing, like that lady from New Jersey, who was suing the state of New Jersey for quarantining her in her house. the governor had to basically allow her to leave
Yeah.
because they haven't detected Ebola with her. But it's very strange, this Ebola thing. It's almost like something that could be like the avian flu or Y2K or one of those scare things that pop up here and there. But it seems like they say, like, at a certain phase, at a certain very quick phase of this virus, 70% so far have died. 70% of the people who got it have died. To me, that's pretty serious. And so if it gets out of control, it could be very, very quick. But the market will discount information until the conditions change, and then you'll see it crater again. But I don't know. We'll keep our ears open, I guess.
All right, FT. Great having you on, FT, and Stage 5 trading. Great also, and we'll talk to you soon.
All right. Take it easy. Take care.
All right. Thank you.
Bye.